Barks Alpha here, reporting for Newshound from a forest waterfall with your 24-hour crypto news roundup. On today's bulletin, insider bets on own exposure after XBT exposes Axiom. Japan's SBI Bank pioneers XRP dividends. MetaMask and Mastercard launch crypto debit card. World Liberty Financial proposes governance overhaul. And Stripe founders warn AI will overwhelm current blockchains. Let's dig. Blockchain sleuth XBT published a bombshell report exposing insider trading at the elite trading terminal Axiom. Despite generating over $390 million in revenue, the firm allegedly allowed employee Brox Bauer unmonitored access to sensitive internal tools. Bauer reportedly used these dashboards to track private user wallets and leak confidential data to a select group for profit. The investigation was teased days in advance, creating a wave of market speculation. However, instead of staying out of the limelight, it seems the insiders doubled down by betting on their own downfall via prediction markets platform Polymarket. While various names led the odds for days, a flurry of high-conviction bets flooded Axiom at odds of roughly 7-1, just hours before the reveal. One trader, Predictor XYZ, turned a $65,800 bet into over $400,000, netting a massive return as the Axiom outcome was confirmed, which sparked even further outcry across social spheres. In other news, SBI Shinsei Bank, a subsidiary of the Japanese financial giant SBI Holdings, is allowing its shareholders to receive dividends in XRP as of 31st of March. This initiative is part of a broader push by SBI Holdings to integrate blockchain solutions into its retail and institutional ecosystems, offering investors direct exposure to the digital economy. While SBI Holdings CEO Yoshitaka Kitao recently clarified that the firm's primary investment is in Ripple Labs rather than the XRP token itself, the group remains a central driver of XRP adoption in Japan. For investors, the flexibility to hold, spend, or convert their XRP dividends highlights a new era of crypto integration in the Japanese financial sector. Next up, MetaMask and Mastercard have officially launched the MetaMask card in the United States, enabling users to spend cryptocurrency directly from their self-custody wallets. The card allows users to pay for everyday goods and services at any Mastercard merchant. Unlike many other crypto cards that require funds to be transferred to a centralized exchange first, this card allows users to maintain control over their assets until the moment of purchase. Currently, the MetaMask card supports spending in USDC, USDT, and WETH, which are converted into fiat currency at the point of sale. And in addition to its spending capabilities, the card features an on-chain reward system designed to provide incentives to users. Speaking of user incentives, World Liberty Financial, the crypto initiative associated with the Trump family, has proposed a significant governance overhaul that introduces mandatory staking and a tiered membership structure. According to the proposal, holders of WLFI tokens will be required to stake their assets for a minimum of 180 days to participate in governance voting. The project aims to ensure that voting power rests with long-term participants rather than short-term speculators. Voting weight will be determined by a non-linear formula, considering both the amount of tokens staked and the remaining lockup duration to prevent an overconcentration of power. The proposal also outlines new node and supernode levels for significant stakers. Each provides additional benefits, culminating in priority access to partnerships and potential revenue sharing. Additionally, active stakers who participate in at least 2 governance votes can receive a 2% annual reward from the Treasury. Last but not least, the founders of the payment processing company Stripe, Patrick and John Collison, have stated that blockchain networks will need to scale significantly to accommodate the future demands of AI agents. According to a recent CoinPaper report, the Collison brothers argued on the social platform X that current blockchain infrastructure must eventually handle up to 1 billion transactions per second, TPS. They suggest that without such massive upgrades, existing networks will fail to keep up with the oncoming surge. The report highlights a significant infrastructure gap, noting that even high-performance networks like Solana currently reach peaks of nearly 1,200 TPS. While Solana and other networks have theoretical maximums that are much higher, they still fall far short of the billion TPS benchmark proposed by the Stripe founders. That's it for today, dogs. Remember to share with the pack, keep your noses to the ground, and your ears pricked so you never miss a beat. Reporting for Newshound. This is Barks Alpha. Yes, I do.